All right, we are awaiting those big earnings from Apple, too. Let's bring in today's panel to discuss all of it. Gary Kaltbaum from Kaltbaum Capital Management. He's also a Fox News contributor. And we've got Paul Aversano from Alvarez and Marsal. He is live out at the Milken Conference. Paul, I mean, are people talking about Apple out there, or have they moved on?
They've moved on a little bit. The big talk of the town seems to be trade. We had Wilbur Ross, we had Steve Mnuchin out here. We know we have a delegation headed to China to talk about trade and tariffs, as well as President Trump's announcement on the tariff delays or extensions for a month. So that's really been the main mood and discussion out here right now. Yeah.
Gary, what do you think about the market today and the mood of the conversation on Wall Street?
Well, I would pay no attention to the Dow because the underlying market was much, much stronger. And the most important thing I saw today is the semiconductor group, which leads the market up and down, has been doing it for decades, held long-term support. The Dow held long-term support. The S&P did. Now, whether or not we could get juice from here to the upside, I don't know. But it's a good start, and we'll get a little bit more as we go through earnings season in the next week or two.
Paul, we've seen a lot of earnings that were good. There seems to be a lot of energy in the economy in particular, and people feeling good. There are more people at Milken, it seems like, than there have been in years. I mean, I talked to more people anecdotally who are going out there to sort of get the lay of the land. What is the feeling like there? Does it feel bullish in general?
In general, first of all, I would say your observation about the crowds at Milken are absolutely correct. I think it's the largest crowd on record this year. I would say the overall sentiment for the most part is bullish, although there are some undercurrents of bearishness out there. Regarding mostly, the increase in raw material costs associated with trade and the tariffs if we get into a potential trade war, as well as potential costs with wage inflation, wage growth. And I know we have the jobs report coming out, the April jobs report coming out on Friday of this week. So people have some concerns on those two fronts, leading to ultimately inflation and then interest rates.
Okay, well, as Paul was just saying, the European Union getting 30 extra days to come to a deal with the United States. The steel and the aluminum tariffs were supposed to take effect today. The White House says it's already reached deals with Argentina, Brazil, and Australia, very important countries for trade to avoid tariffs. White House Press Secretary Sarah Sanders says there is a strategy to the extension. Take a listen.
We are extending those negotiations because we've seen some progress. I'm not going to get ahead of what that may look like, but we have 30 days to continue in those negotiations and hopeful that we can get something that works for everybody.
And, Gary, we saw evidence of this in steel stocks, which were way down today. So apparently that's for the overall economy. It might be bad for steel for one day, but it's good for the overall economy. And I'm wondering why maybe that's what the Dow responded to at the end of the day.
Well, I think what you have is a little bit of confusion in that we don't know how this is going to end up, and you're giving one country this, not giving another country that. One country says one thing, the other one says. So on a daily basis, you're not sure. I don't mind what they're doing, going tit for tat with each country, as long as we end up in better shape as we move forward, and you keep your fingers crossed that they know what the heck they're doing.
But, Paul, let's move back and look what's happening with the market, because overall we are kind of at a stall, at least with the Dow Jones Industrial Average. We keep expecting the next leg up to this market. We've got all this good news on tariffs, on North Korea, on the economy in general, but the market seems to hit a ceiling right around at 25,000 on the Dow. What do you expect next? Another big leg up for the market, or a downward turn into a bear market?
Well, if you want my personal opinion on what I'm hearing from some of the folks I'm speaking to out here at Milken, I would say I'm bearish. First of all, I would say we've never had in the history of the United States an expansion greater than 10 years. The most recent expansion that we've had in the economic cycle was the run-up to the dot-com boom, which was from 1991 to 2001. So it's 10 years. That's the most we've ever seen. The current expansion that we're experiencing started in, I believe, June of 2009. So we are about 9 years into the current expansion. So I think just historically, if we kept this up for another year or so, we would actually be in record territory as far as economic expansion.
Okay, I'm getting to wrap up. I've got to ask Gary. Gary, what is more likely to happen? Okay. Another leg up for the market or a bear market? Quickly.
I think we can wake up in October and still be at these levels. Remember, we had 15 months of a monumental gain into January of this year, and this is just a normal consolidation, and I wouldn't fret it or sweat it just yet.
Gary, Paul, good stuff. Thank you, guys. I appreciate it.